Hello everyone, happy Thanksgiving and welcome to new Inconvenient Truths. I'm your host, Jennifer Zeng. How much longer can China's economy hold? For years, this question has haunted observers. The economic indicators released for October offer a deeply unsettling answer. The structural fracture of China's economy appears to have already begun. This alarming conclusion comes from economist Lao Man. He reached it after collecting and analyzing many types of official macroeconomic data from the Chinese government. First, we must point out that all these economic numbers are already beautified. It is widely known that China's official data is often edited and polished. So, if the beautified numbers already show signs of breakdown, the real situation in the real world may be far worse. We first need to understand a basic fact. During the first 3 quarters of this year, China's economy was able to stay roughly stable only because the central bank printed money out of thin air through a method called buyout reverse repos. A buyout reverse repo works like this. The Ministry of Finance issues government bonds. Commercial banks buy these bonds on the surface, but in reality, right after buying them, they quickly sell the bonds to the central bank. The term of the deal is 3 to 6 months. After that, the commercial banks are supposed to buy the bonds back. But in actual practice, the central bank keeps rolling over the operation again and again. It buys more bonds from the banks. So banks do not really need to buy anything back at all. Through this method, the central bank printed money out of thin air and temporarily kept the Chinese economy stable. By November this year, the central bank had already printed about 928 billion US dollars this year. By end of the year, it will likely exceeded 980 billion US dollars. This money flooded into the capital market and pushed up China's stock market, creating a fake bull market in the first 3 quarters. But money printed out of nothing never enters the real economy. No country can solve economic problems by printing money. In China's case, this printed money mainly went into local infrastructure projects because of widespread corruption among officials. Most of the money was stolen through many channels or flowed into the stock market or left China altogether or became private Bitcoin holdings. Very little entered the real economy to become positive cash flow that can support growth. Looking at history, printing money to support an economy usually lasts only about 1 year. China's central bank started this method on July 1st last year. More than a year has now passed. This is why China's economy entered a breaking point in October. The following numbers confirm this one by one. Let's first look at the government revenue and spending. The last column of this table shows the fiscal deficit. It shows that at the end of October, China's fiscal deficit was 1,206 billion US dollars, which is 37 billion smaller than the 1,243 billion at the end of September. Why did this happen? Look at the monthly fiscal revenue chart for 2024 and 2025. It shows that in the first 5 months of this year, fiscal revenue was very weak with negative year-over-year growth. Starting from June, fiscal revenue increased for 4 months in a row. This was because of the crazy new taxes we discussed in a previous program. But in October, fiscal revenue again turned negative year over year. This shows that the crazy tax increases have already lost their effect. With higher consumption taxes, higher income taxes, and higher social insurance taxes, the government can no longer increase revenue. Entering the fourth quarter, the situation may get worse. Fiscal revenue may fall faster and faster. At the same time, fiscal spending in October fell by a shocking 19.1%. This is the biggest single-month drop since records began. Only a 0.6% fall in revenue caused a 19.1% cut in spending. This shows a fiscal system that relies on insane borrowing to barely stay alive. In October, it suddenly ran out of cash. Governments at all levels had to slash spending hard, or their cash flow would stop immediately. This is the direct signal that China's government finances are about to break. Now, look at fixed investment. The table shows that in 2019, fixed investment already fell by 13.2%, the biggest drop on record. Now, look at the monthly data. Since June this year, fixed assets investment has kept falling. In October, it fell 15.5%, breaking the record set in 2019. If this continues for 2 more months, China's construction industry will shut down completely. Now, let's look at financial data. This is the monthly chart of total social financing. China's economy is essentially a debt economy. Debt is the only engine left. If debt stops growing, the economy breaks. As shown in this chart, until July this year, China could still expand debt, barely keeping the economic running. But after August, financing began shrinking every month. Negative 15.4% in August, negative 6.2% in September, and in October, a disastrous negative 42.2%. 3 straight months of shrinking debt, with October nearly cut in half, means the Chinese economy has lost all momentum. The economic breakdown has already happened in reality. Too many Chinese people, housing prices only go up was once a belief. This chart shows that China's real estate bubble started to burst in 2021. New home sales reached a peak of 1.794 billion square meters that year. By 2024, sales had dropped to 974 million square meters. This year, especially in the first half, sales declines were small. This made many people believe the market had hit bottom, but the hope was short-lived. Monthly data shows that after August, sales fell by double digits. By October, the drop expanded to 19.6%. Weekly reports from major real estate agencies show that the market is still shrinking fast. Sales in November are falling toward 30%. By December, they may be cut in half. Surviving real estate companies are already on the edge of a cash flow collapse. Now, with sales crashing again, and with December and January being months of heavy payments, contractor bills, non-repayments, and even borrowing to repay old loans requiring cash upfront, developers will certainly face a collective cash flow breakdown. Many Chinese media tried to claim that China's export growth this year shows strong economic resilience despite the US-China trade war. But in reality, this is the final struggle of exporters. They are dumping inventory at any cost so they can at least receive export tax refunds. Some even sold off factory machines. This is a desperate, dying struggle. So the monthly table shows until September, exports were still rising, with September growing 8.22%. But in October, the numbers suddenly dropped to negative 1.17%. This means China's export industry will now shrink rapidly. China's last fig leaf have been torn off. In real life, negative news keeps appearing. One striking example is the situation of 300 million migrant workers. As jobs in the cities shrink, a huge wave of returning home has already begun 3 months before Chinese New Year.
To do in Guangzhou now. All these folks are our fellow villagers heading back to Hubei. It's only mid-November, man, and already so many are leaving. Look at this. Hundreds of people, all packed and ready to go. No choice now, everyone's heading home, all of them going back to Hubei.
So this puts major pressure on the government. On November 13th, the Ministry of Agriculture and Rural Affairs held a special two stabilization, one prevention meeting. They said they must stabilize the number of people lifted out of poverty who work outside, stabilize their income, and preventing falling back into poverty due to unemployment. For the first time, official reports even used the phrase prevent large-scale returning home and staying home. But in reality, these 300 million migrant workers left their hometowns because the land cannot feed everyone and the countryside has no jobs. If the cities now send them back, they become a huge burden on the regime's stability maintenance system. Up to now, China's stability system mainly focuses on the cities with digital surveillance and large police forces ready to suppress crowds. But in rural areas, if even 100% of 1% of migrant workers rise up or out, that is 3 million people, more than the number of police in China. Rural homes are spread out. Many villages have no police at all. Even if police can suppress unrest in one village, Jobless farmers can become roaming rebels and cause trouble elsewhere. Local police forces cannot coordinate well. If the number of protesters is larger than police, suppression becomes difficult. Many dynasties in Chinese history fell because of roaming rebels. This is why the CCP regime is extremely worried about large numbers of people being forced back to the countryside. Other real-life signs match the worsening macroeconomic numbers. Reports of unpaid salaries for civil servants, doctors, teachers, and sanitation workers keep appearing. On November 21st, Chinese media platform New Retail reviewed the third quarter reports of 22 listed retail companies. Only 2 companies had both revenue and profit growth. 20 traditional retail companies saw profit drops of 89%, and 10 companies saw profit fall more than 50%. Right now, the regime faces not only the possible collapse of millions of migrant workers, but also a fiscal crash, mass unemployment, international pressure, huge capital outflows, a weakened military due to purges, internal political struggles, and public anger nearly boiling over. Maybe on the surface, the CCP will keep pretending to stand strong. But when even the edited, beautified data can no longer hide the economic breakdown, more shocking realities will soon appear before the world. By the way, a few days ago, I held a poll asking whether I should use AI-generated voiceovers. Most viewers preferred that I do not use AI, so I will continue appearing on camera myself to bring you the news. For viewers who are not used to my accent, please turn on subtitles. After every live stream, I add subtitles as soon as possible. I hope this can be a good solution for everyone. Well, that's all for today. Please like, share, comment, and subscribe if you haven't already. You can also go to my website at jenniferzengblog.com to sign up for a membership or make a donation. Any kind of support means the world to me. Thank you all. For those who celebrate, I wish you a very happy Thanksgiving. And to everyone, take good care, and I'll see you next time.